Hi, everybody. This is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profit. And in this video, I'm going to be talking to somebody who I think gives incredible wisdom about what's happening in the fundamental arena outside of cryptocurrencies, but is nevertheless going to impact what happens with cryptocurrencies, because we're all impacted with what happens in the whole world of fiat currencies.
Take the first step towards online privacy. Get NordVPN.
Hey, Rafi, thank you so much for making yourself available.
Thanks for having me.
You're so welcome. You're so welcome. And just so people know, you run a YouTube channel with under the name of Rafi Farber, which I take is your name, and I'm going to link to that in the description below. You also run a service called Endgame Investor, which I'll also link to in the description below. And why I've invited you on is because I've learned so much from you. Do 2 or 3 videos a week, short videos, and I've learned so much about general economics and stuff like that and how things are happening that I thought it'd be great to have you on. Do you want to say a little bit about Endgame Investor and what you offer?
Yeah, sure. The Endgame Investor, it's for people who believe that the end game is coming. If obviously you think everything's fine, then it's not for you. Everything's not fine. And I come from the Austrian School of Economics. I have no economics degree. The Austrian school and economics itself is really a science of logic. It is not a science of empirical data. Empirical data can be used to illustrate certain logical principles, but what I focus on is the logical interplay of human action and how that influences trading and monetary economics and what is happening with the monetary system in terms of how humans are behaving and why they change their behavior for certain reasons. And it's all a logical science. I'm not looking into statistics and saying this much and that much. I can use that to illustrate the logical principles that I'm coming up with. But I'm not like doing a hard like science like physics where you have data and then you try to deduce certain conclusions from the actual hard data. And what I mean by endgame specifically,
we'll come to that, Rafi. We'll come to that, right? I just want to ask, if somebody subscribes to the Endgame Investor, what are they going to get? What do you offer?
Okay, it's very simple. You'll get a daily review of most of the precious metals markets, but also interest rates, monetary. It's monetary analysis. What is happening in the monetary system? What are the signs that what is going to happen next? I analyze the commodity markets. Analyze the shortages that are going on, try to give a timeline of how things could develop, and trading advice, model portfolio. If you're into the gold and silver markets and you understand where money is going, then you like libertarian theory and Austrian School of Economics, then I'm your guy.
Okay.
You can get a 2-week free trial, by the way.
Sorry?
Just to try it out. You can get a 2-week free trial just to see what my style is and get the portfolio. And if you like what I write, then stay on.
Okay, well, I'll link to that in the description below. And I certainly like what you say on your videos. I've learned a lot from it. And I'm not economics trained either. In fact, my background is in children's social work. And I do that part-time, and I run my YouTube cryptocurrency channel. It should be part-time, but it takes up more time than that. All right, you started off saying that you think we're near end times. What do you mean by end times, and what are the signals that indicate end times?
Well, end times, I mean the end of the current monetary system. The entire world operates right now in a dollar standard, all of global trade, meaning the reason that the West is so rich, that we have so much stuff, it's all based on the dollar, and the dollar is being poisoned. When a monetary system is poisoned, then what happens is a breakdown of the economy. Because if you don't have this a circulating medium that can maintain its value, then the exchange of goods and services breaks down. Now we've seen that in isolated countries many times throughout history, going back to Tacitus and Roman history. In medieval times, there were hyperinflations. The most recent famous one is 1923 in Germany, which led ultimately to World War II. And the end of that era, World War II was a big watershed moment in world history that the world changed, arguably because of the hyperinflation in Weimar in 1923, which led to the rise of indirectly Hitler and the frustrations of people that they were just full of hate and insecurity, which led them to a dictator. We see similar things happening now. I mean, the kind of political leaders that are rising up all over the world are pitting us against each other. People who do certain things, people who don't do other. I'm sure you know what I'm talking about. What man against man, and this is the environment of a monetary breakdown. Except in 1923, that led to World War II. It was just one country. It wasn't just one. It was Austria. There were others. Hungary. It was a region of the world, but the dollar basically stayed intact, and that's why it took over the world, because it was a stable currency that was essentially gold. When FDR stole the entire gold supply and stuffed it into Fort Knox in 1933, the dollar was mostly backed by gold. The Fed's balance sheet was mostly gold, and that's how the dollar became in charge of world trade. But this is an end time. It's not going to be the end of the world. The world will continue. Humankind will continue, but it's going to be a very different planet very shortly, very soon, because the entire dollar standard is breaking down. And we've never, ever in human history seen the collapse of a reserve currency that affect the entire planet. The closest we can come maybe is the collapse of the Roman Empire, which pushed humanity back 1,000 years. But it was inevitable, because Rome kept its wealth by conquering and then stealing the wealth of the nations that it conquered, and then inflating, and the same thing that all empires do. So yeah, we're approaching the end of the world as we know it. And I don't know exactly what's going to happen, but I know we have to prepare by doing whatever you can to maintain purchasing power and learning skills to get through whatever is coming.
Right. Okay. And I know, when you were talking about Weimar, I was also thinking about Zimbabwe, when Mugabe started printing the Zimbabwean dollar like crazy to pay off the IMF, and then he started printing off even more to pay his police forces and his armies, and it eventually led to the collapse of the Zimbabwean dollar. And you can go to eBay, or at least you could a few years ago, and become a Zimbabwean trillionaire for a few US dollars or something if you wish to. But they don't use the Zimbabwean dollar anymore. They transact with gold, with the rand, with euro, with dollars, and also with Bitcoin, as far as I know. It's what I've heard. But the dollars collapsed, the Zimbabwean dollars collapsed. And you're saying the same thing is going to happen in the US dollar. And I think you and I would both agree that's because of the counterfeiting, keep printing it. So then one of the things you keep pointing out in your videos are indications of that. Do you want to give reference to some of the markers, some of the things that, apart from the rampant money printing, but what are the signs that indicate we are near dollar end times?
What I've been covering recently is a phenomenon called backwardation in the futures markets. Now, it's a technical term, but it's not that hard to understand if you just don't divorce yourself from the logic of it. So when there's a shortage of a commodity and there's not enough of it, so the price of that commodity for immediate delivery is going to be higher than the price of it for later delivery, because the market needs it now, so it's willing to pay a premium. And say, for example, oil. If there's a company that stocks oil, that has a whole bunch of oil somewhere, and they can get a premium by releasing it to the market now, then they'll do that. It would incentivize them to restock the commodity at cheaper prices in the future by buying cheaper futures contracts and then taking delivery on that cheaper product. So a backwardation, when spot prices for immediate delivery are more expensive than futures prices, that is supposed to eventually alleviate a shortage by flooding the market with supply now, so that prices eventually fall, and then markets can go back to what they should be, which is contango. Contango means that the price of a future delivery is higher than present delivery because you have storage costs and insurance costs, and you're locking in a price for a premium. The problem is that when backwardation persists and a premium for product now maintains itself for a year and a half or more, then what you have is consistent destocking of that product, which makes the existing supply of that product less and less and less, and then eventually it just runs out. The thing is, what would cause persistent backwardation of a commodity? Why would it last a year and a half, or whatever? The answer is because there's two sides to every transaction. There's the commodity, and there is the currency that you're buying the commodity in. If the currency is losing value faster and faster, then people are going to want to get rid of that currency faster and faster, and the backwardation is not going to be able to resolve itself. Then you have rising commodity prices, which are going to cause a cascading domino effect. We saw this with natural gas. Natural gas prices, I think yesterday they were up 10-12% or something, just yesterday.
Wow.
So you have other companies that need natural gas to produce things like fertilizer for growing food, but they can't sell the fertilizer at a profit, so they have to shut down because the natural gas is too expensive. So then you don't have fertilizer, and then the food supply goes down. When the food supply goes down, then the food prices go up, and then people that rely on food, which is everybody, they get poorer and they can't buy other things, and then it causes a domino effect of production that keeps going lower and lower and lower. But what's really happening is that the monetary medium is poisoned to the point where people are just trying to get rid of it to get out in front of the theft of the inflationary process. And it's a defense mechanism for society that governments have been thieving and stealing from people through the inflationary process, where they get to use their inflated proceeds first before everyone else, and by doing that they steal resources. And when people realize this, it's not that they realize it consciously, but when the public wakes up to this and realizes that the currency is losing value faster and faster, then they get out in front of it, and then the frequency of rising prices rises above the actual money printing, which is when the Fed will lose control. And I think they're already there. We're already in that process, and there's no way that they can stop it.
Yeah. Now, I can get it from what you're saying from a personal level, like an individual level, because I've been hearing talk for years, preppers and stuff, right, that the end is going to come, so let's get ready now. But also, I think since the lockdown started in March 2020, more and more I got concerned about the supply chain. And the way I would say it, like at an individual level, is, if I think my £10 is going to buy me less washing up liquid in a month's time because of inflation, or rather the depreciation in the value of the £10, the depreciation in the purchasing power, will let me buy £10 worth of washing up liquid now, or £100 worth of washing up liquid now, because it's going to buy me less in 3 months' time, 1 month's time, or whatever. And then certainly with large commodity traders and large institutions, they're going to be doing the same. Well, because there was something you posted a few days ago on copper, which I thought was really interesting, that they're buying up the copper now because their money, if I've got $1 million, that's going to buy me more copper now than it's going to buy me in a month's time, because the value of my $1 million, the purchasing power of that $1 million is going to go down, because the governments are going to flood the markets with more $1 million come a month's time.
Yeah.
So then the supply runs out. But the thing I found out, and that's what backwardation is, and the thing that I found really interesting when you said on this video about the London Metals Exchange virtually running out of physical supply of copper, and it's happening with other commodities as well, as you've pointed out, is what's the ramification for the gold and silver markets? Because as far as I know, there isn't backwardation with those markets, and that's because of the paper certificates. People don't deal with paper copper. I don't want a certificate of copper. I can't wire a house with that. I need the actual physical stuff in order to make the electrical components. Don't give me paper certificates. So people demand delivery, but not with gold and silver. So how might it play out with gold and silver?
I'm going to get to that in a second. I just wanted to point out a very wise comment that you just made, that yes, hyperinflation, or I wouldn't even call it hyperinflation, because hyperinflation is already happening in the money supply. Hyper rising prices is really backwardation in consumer prices. The prices rise to try to disincentivize people from buying more and more and more, because it costs more and more. But the people don't care. They just want to dump the currency. They're not interested in necessarily the stuff, but getting rid of the money, and then they'll figure out what to do with the stuff later.
Yeah, that's like getting rid of the money for something tangible.
Yeah, it's not about hoarding. It's about getting rid of money. And the definition that I use of hyperinflation is not necessarily prices going up a certain amount over a certain period of time, which is arbitrary. It's when the desire to hold cash balances as a money falls to zero and nobody wants it anymore.
Yeah.
So you said, yeah, the last two commodities to go into backwardation will be silver and then gold. Gold will be the last one, because these are the money commodities. Copper is a sort of money commodity. It can be used as money, but it's mostly industrial. Silver is kind of half and half. It's a monetary commodity, but it's also an industrial commodity. Gold is mostly a money commodity, only secondary, very minor. It's an industrial commodity. You can use it for certain industrial things, primarily jewelry, maybe computer chips or dental fillings and that, but it's mostly a monetary commodity. So when that's true that most people do not call for delivery on gold and silver, but it is possible. It's something that I am trying to do right now, and trying to call for delivery on a silver contract, and I'm in discussions with my broker on trying to get it through, and this has been going on for a month, and it's very difficult for an individual to do it. But eventually, gold has been in backwardation before, very briefly in 2015 it was, but eventually silver and gold are going to return to backwardation when it becomes so obvious that the dollar is tanking, that there will be a run on the COMEX, just like there was a run on the LME and copper. It's just going to take longer when people do not trust the futures anymore, right? What you're probably going to see is delivery trying to be taken on oil or copper in New York, or beef, or head of cattle, or whatever it is, and then there's going to be defaults on contracts, right? Because there's not going to be enough, because there's destocking and constant backwardation in these commodities. And then when people start to realize that all these futures contracts are not backed by anything physical, they need physical stuff. So they're going to go to the gold and silver markets where they can get the physical stuff, and with that, do private deals with commodities brokers. Forget these exchanges that are naked, but that's going to be the last straw, where people go to the gold and silver futures markets and all call for delivery at once, and most people are not going to get it. And that's when gold and silver go to infinity in dollar terms. Doesn't mean that gold and silver have infinite value. They don't. It means that the dollar has zero value, and that is definitely going to happen.
Yeah, no, I can get that. It means, I think the phrase is no bid, that there's no bid high enough that people will accept for gold or silver. Okay.
Right.
Now, I don't know if you're familiar with Gold Goats and Guns. Tom Luongo, he comes on my channel every month. I did a video with him and Alexander Mercouris of the Duran, which I posted on my channel a few days ago. And one of the things that he talks about, and I'm presenting this to you as an idea, and you may not be familiar with this notion, so you have to think in your feet here, Rafi, is that what Jay Powell is doing is actually taking dollars out of the market using the reverse repo facility. So then that's actually shoring up the dollar. And Tom's argument is that what that will do is cause a weakening of the euro. So capital will still keep flowing into the dollar because of the reverse repo facility, which I don't understand, right? But then I know about child protection much better or clearer, right? Anything you want to say about that? And that's against a backdrop that Tom argues that there's a struggle for the center of global capital between the US, Europe, and China. Where's the center going to be? And that Jay Powell wants it to remain, and the investment bank wants it to remain with the US. So anything you want to say about withdrawing the reverse repo, taking dollars out of the market that way?
Well, reverse, just specifically about reverse repo, I'm not an expert in these monetary plumbing systems. I've looked into them, but I haven't studied them, and they're very, very complicated. But from what I understand, right, there's just so much QE, so much money printing, that it costs way too much money for banks to even hold this cash, because there's a cost of administering all this. But generally, I'll say that we're in a territory now. We're in a time when nobody really understands what is going on, and things that have never happened before are happening now. So I don't think, given that Jay Powell doesn't understand basic monetary logic, I don't think that he has this grand plan that makes any sense about what to do with capital flows and this and that. These people, we give them way too much credit. I don't think they have any idea what they're doing or the consequences of their actions will be. Most of this in totalitarian regimes, most of the time they're just idiots, and they can weave up these interesting theories that sound scientific and it's just to pull the wool over people's eyes to make it sound like they know what they're talking about, but they don't. So
hold on. In totalitarian regimes, the rulers are idiots. I mean, how dare you say that about Joe Biden and Bennett and Andrews in Australia and Boris Johnson in Britain and Macron in France?
Yeah, they're all
kidding with you. They're compared to Putin, who's done a really great job for Russia. Go on.
Yeah, well, Putin knows what it's like to go full totalitarian, and he understands that it's not a good idea, and he just wants to steal as much money for himself, which is not as bad as stealing as much money from everyone to destroy things for its own sake. Totalitarian people are very smart in terms of lying to people and making them think that they know what they're talking about. But when it comes to actual logic and what they're doing, they don't know. So I don't think that there's any grand plan that is going to work for these people. And they're trying to put these very sophisticated systems to manage trillions of dollars a day together. But in the end, they're very, very few people. And the question is, it's going to come down to when the public wakes up and dumps the currency. And that when that happens, they will lose control of absolutely everything, and their reset plans are not going to work. There's a reason that conquering the world is impossible and nobody ever has done it, because it can't be done. Because once you conquer a certain portion of wealth in the world, everything resets by itself out of your control. So I don't think that there is any rhyme or reason to anything that these people are doing other than to try to lengthen the fuse and keep power as long as they can. But when they lose it, they will lose it all at once, and all their plans will come to nothing.
Okay. And what about, but by the way, I like what you're saying, especially the bit about the Great Reset not coming to fruition. Very
no, it will.
I can get
the Great Reset will come to fruition, just not on their terms.
Yes, not the one that they want under a surveillance state and vaccine passes and stuff, right? Which is, which I'm with you on that one. Then, and I just got to say there was the video that you did about your, slight aside, about your wife losing her employment because she refused to comply with the mandate. So in that regard, I'm a kindred spirit. I just want to say that, right? It's just, it is totalitarianism that the state should have the right to inject something into, without, like not my body anymore. It's the state's body, apparently. Anyway, moving on. What about raising interest rates? Because my understanding is that, Jay Powell could raise interest rates, even like a tiny, tiny little bit, because you don't have negative interest rates in the US. That would destroy Europe, and it would bring more capital into, because people would want dollars as a stronger currency. Could that delay end times, or would that be sufficient? No. Oh, okay then.
No, it can't. If it was able to delay, it delayed end times once. It delayed end times in 1979, 1980. That if I did a video on this too. I looked into Paul Volcker's transcripts as the head of the Fed, and he became head of the Fed in, I think, August 1979, when the dollar was on the verge of complete collapse. And he was saying in his meetings that he doesn't know what's going to happen with the dollar, but he's got to try to save it because he has no other choice. He was talking about the death of the reserve currency back then. And what he did was he kept raising interest rates higher and higher and higher until the incentive to hold money for that interest was higher than the incentive to get rid of that money because of inflation. And that stabilized the dollar for what looks to be about 40, 41 years. But now all of the dollar's strength is still running on the fumes of that tank that Volcker filled in 1979, 1980. In 1981, that's when interest rates peaked. But do that now, the entire banking system basically would collapse in days. Raise interest rates to 4 or 5%. Where are all these bonds that are being issued in the trillions since 2008? Who owns them? The banks own them. If the banks own them and you raise interest rates, their balance sheets get destroyed. And then all the debts that they hold default, and everyone who owes money to the bank defaults. And you have this domino that would just go off very, very quickly. And it's like, I don't understand. I mean, I understand, but like, it's so obvious that that's what would happen. It's not even an elephant in the room. It's like a leviathan in the room. Everybody knows it. It's so obvious they don't even want to say it. But so no, there's no way that they can raise interest rates. The market will raise interest rates. The Fed won't. And when the market does, that's the end of the dollar. From 1978 to 1980, interest rates skyrocketed with inflation. That was the stagflationary feedback loop. And that's the same thing that's happening now, with shortages worsening now. And everything is so much more interconnected now than it was back then. So you have a much more centralized system. And because everything's so interconnected, it will collapse even faster than it did back then.
Right. Okay. Now, you said something that I don't understand, that the market will raise interest rates. I mean, how does that happen? What's the mechanism? Who's the market? Who are the actors that would raise interest rates?
Those that hold debt or own bonds. They will see that if price inflation, if prices are rising faster and faster, then this debt that they own is not going to help them, because it yields much less than the purchasing power that is being lost, and they're going to try to get rid of them and sell them to anyone who will buy them. Because you have the demand to sell bonds that will feed back on itself, then the bonds go lower, and that pushes interest rates higher and higher, because the coupon on the bond is the same and if you buy a bond for half the price, the yield on that bond doubles. And not exactly that, but that's how it works. It's inverse. So the market is the people, the individuals that own these bonds, and they will sell it, and nobody's going to buy it except the central bank. And whatever bid the central bank hits is going to be the price. But they're going to be paid with worthless money. So basically, in the end, all central banks of the world are going to own all the sovereign bonds of the world, and they're going to shoot the moon. They're going to have all the sovereign debt, and it's going to be worthless.
Wow. Wow, interesting times. Now, it seems to me that we're in the, like how I think inflation goes, the increase in money supply, little, and then boom. Yeah. And I think we're in this little curve of the hockey stick. I mean, where would you say we're at? How long have we got?
How long have we got? I don't know. If I knew the answer to this question, I'd be a millionaire. Or a billionaire, trillionaire, or whatever. I just play the options or futures and just bet it all, and that would be it. But I can't do that because I don't know. But I try to play it wisely. What I don't see, but even though I don't know the exact end time, I think we are in a point where we're already in the public wake up phase, right? So 2007, 2008, right? We saw prices kind of skyrocket across the commodity sector, another commodities vertical line, right? We saw it in oil. We saw it in I think cotton also in 2011 made an all-time high. It was a bunch of different commodities, but back then there was still room to try to strengthen the currency by raising interest rates. Right, and that's or stopping the money printing or slowing down the money printing. If you look at the money supply in 2007, 2008, it was really, really slowing down, probably because the Fed was behind the scenes slowing it down, which is eventually what caused the banking crisis, because banks need a constant supply of new money to keep their debt pyramid going. So there was an opportunity to slow down the business cycle back then, which created the bust and gave us another 10 years or 12 years or so to keep it going. But now there's no way to do that. So right now we're in that hockey stick bend, but more importantly, we're in a point where there is going to be no ability to create another bust in order to reset this another 5 or 10 years. I don't see that. It could last another year. It could last another 2. I mean, I play the options market with a tiny portion of my portfolio, my Endgame investor portfolio, betting on a year, betting on 2 years, and if I lose, I just reload. But eventually I'll win. So wins will make up for the losses. It's happening, and then it's not going to be another 5 or 10 years. There's not going to be another 2008 where things reset. This is it.
Yeah. No, and I can get that from the breakdown in the supply chain, because that will impact people's lives. And then, when they can't get enough food, they're going to demand more currency to buy what food there is, because the price will go up because the food is scarcer. And then governments, what are they going to? They're just going to print more currency.
Yeah, but even if we take our heads out of the realm of economics for a second and look at how people behave and how people are living their lives, right? The amount of fear and irrationality around the world now is so large, and people are acting so bizarrely that it's like a different planet, and that totalitarianism and this sort of strange behavior, it all goes hand in hand. And like in 2008, people weren't acting like this. I mean, there was I think a swine flu epidemic in 2009. People handled that basically all right and pretty much ignored the media's calls to freak out about it. But now, like the entire world has gone crazy. so yeah, once you get to that point, you're in a totalitarian mentality where the people are already under their thumb, and there's no way to go but to push through the insanity and take it to its logical conclusion until everything falls apart, and then people can say, "What the hell were we doing?"
Yeah. Okay, that makes complete sense. Now, what can people do in the face of this?
I think the most important thing you can do is to find a community of like-minded people who you can rely on and trust, to keep your mind from losing its sanity in this time, because we're all being isolated, and people of our mentality, across religions, across philosophies, we all have one thing in common, and that is that we believe in the sanctity of the individual human mind. You have to find people like that, or you'll lose your mind, because we're under psychological attack. What you can do is stack real money, and real money, in my opinion, begins with gold and silver. If you want to have some Bitcoin, I'm not against it. It's a decent speculation, but if you putting a big chunk of your money into crypto, I think is somewhat dangerous. So I own gold and silver mining stocks, mostly because once everything collapses, companies aren't going to be able to pay dividends in dollars because they'll be worthless. So, but gold mining companies will be able to pay dividends in real money, whether gold or silver certificates or whatever they dig up from the ground. Be armed, have food, grow food, try to make deals with local farmers in your area, and pray.
And pray. Very good, very good. Well, thank you so much for all of that. And I would just say that I think you might agree with me, that currently gold and silver are available at a discount.
Yeah.
And they're not rising in value, in nominal value against the currency, because of the naked shorting, which means that the discount that's available is is growing day by day by day by day. And I think gold and silver have never in history gone to zero. And it will get to a point where I think people will rely on gold and silver, and also I would say cryptocurrencies, but then people got to check them out and do their own due diligence and don't just go and buy anyone that's going. I do know in Venezuela they're transacting in gold and also in cryptocurrencies, because what choice have people got? People got to exchange, and they got to trade. They got to, economic activity carries on anyway, during an hyperinflationary collapse, and also afterwards. Rafi, anything you want to say to finish up? Anything we haven't covered that you think is important to mention?
Right. Last thing I'll say is that you said that the shorts on the futures market for gold and silver are suppressing the price. That's true, but more fundamentally, there should be no futures market in gold and silver at all, because gold and silver should be the money through which other commodities are traded. And how miners are able to hedge their price is that when they see that a certain amount of gold or silver can buy them a certain amount of goods, then and it's less than it costs to dig it up, then they'll dig it up. And if it can't, then they won't, and the supply will not climb as much, and the value of gold and silver will go higher. The very fact that there is a futures market for gold and silver is itself the manipulation, because there shouldn't be. The futures market for gold and silver is priced accurately for gold and silver as industrial commodities, not as monetary commodities, because once everyone sees gold and silver as monetary commodities, which they are, they just don't realize it, then what's the demand for money? It's everybody. What's the demand for dental fillings? Very, very low. But once everyone wants gold and silver, not because of what they can do industrially, but because they want it as a money, then the gold and silver futures market collapsed completely.
So I really like what you say about there being no futures market with a money, because that makes sense. If I draw a parallel example, say with the British pound, well, there's no futures market for pounds or dollars. That would be absurd, because it just wouldn't be with money. You don't have that. So that makes sense. So thank you so much. And that's the sort of clearly explained analysis and smart analysis, which I really appreciate, which is why I wanted to have you on my channel, and why I started watching your videos and everything. And I would invite people to go check out Rafi's videos, go check out the Endgame Investor. And Rafi, thank you so much for taking the time to speak to me. And between now and when I see you next, please keep filling your pockets with crypto profits. And Rafi's especially going to like this bit. It's goodbye from Crypto Rich and goodbye from Crypto Rafi. All the best. Bye-bye.
Bye.